on that, but I would like to bring in at this point Gordon Johnson from JLG Research, who's a longtime follower of Tesla. And Gordon, it seems like investors really overlooking disappointing news both on the earnings front, on the sales front, its outlook for volume growth also subdued, and focusing instead on the launch of more affordable models. Your initial take, Gordon.
Yeah, so the revenue and the EPS missed as we previewed. I think what's very important here is the free cash flow. The free cash flow number, I think, was negative $2.5 billion when the street was expecting them to generate positive 800 and change million. Listen, Elon Musk has been promising a $25,000 car for several years, number one. Number two, even if they produce a $25,000 car, can they do it profitably? I think that's a there's high skepticism around that. And number three, going back to the cash flow, if their business model is now one that burns cash, I think that's going to scare institutional investors. Again, I want to emphasize, the street was expecting nearly $1 billion in free cash flow. It looks like it came in at negative $2.5 billion. So you can talk about future products all you want, but if your business is burning cash, the stop clock, if you will, is now on with respect to how long you can survive. And when auto companies start burning cash, that's a big problem.
You're absolutely right. I see that too, burning through $2.5 billion when the market was looking for positive free cash flow of $650 million, more than that, kind of overlooking the headline earnings miss. I hear your point about them promising this vehicle, but I think there was a question, right, Gordon, about did they scrap it altogether? Is that where the comfort is coming from, that it still seems like it's one of their goals?
Listen, we don't know. I mean, Elon Musk says a lot of things, right? I mean, just the other day it was that they were scrapping it, and now it seems like they put some verbiage in there. Look, we don't know what this means. Like when they say more affordable vehicles, like, is this just more price cuts? Is this a $25,000 car? When are they going to do it? Are they investing in the lines to get this ramped up? We don't really know what this means. But what I'll say is, Tesla, before the $25,000 car, it was the Cybertruck that was going to revolutionize Tesla. They said they had millions of orders. We just found out they've only sold less than 40,000 of these things. When the thought was they sold 100,000, and they've all been recalled. Before that, it was the Model 3 revamp Highland that was supposed to take them to the next level. So again, I think what's very important for institutional money is, are you generating cash? Is your business generating cash? And for the first time in several quarters, the answer to that question is no. I think, again, that's a big problem. Also, one last thing. You noted this, but they cut significantly, it seems like. They cut their growth guidance, right? They were saying they're going to grow roughly 50% every year forever. Now they're saying we're not going to do that. This is a big concern. And looking at what the stock does immediately after has always been a mistake. I think this is a very disappointing report.
Mark, I'd like to bring you in on the reaction that we're seeing on what on a headline basis seems like negative news, right? Bottom line miss, burning through cash flow. And yet, to Gordon's point, we are seeing at least the initial reaction to trade up. Does it speak to a market that maybe had already priced in some of the weakness given how much Tesla had underperformed?
Yeah, I think you had this already kind of predetermined, and they'd already slapped this thing down. Even the last few weeks, it's down from 175 down to 144. So just from a trading perspective, this looks like people were already braced for really bad news, and it's kind of like bracing for somebody punching you in the stomach, and then when you get hit, it doesn't hurt so bad. So you punch back, and that's probably the price action that we're seeing here. I don't know if it's a dead cat bounce. I don't know, but the initial reaction, it's up about $7 from the close. They apparently were worried about much worse than what you're actually looking at, and that's why you're seeing this price action. the street had already knew, but clearly the powers that be knew these were going to be really bad and had been shorting this thing all the way down into this report. And you're seeing them cover that short because it was either about what they were expecting or maybe not as bad as they were expecting. So they come in and cover that short, maybe buy a little bit and ride the near-term bounce.
So, I mean, it does seem like no matter how you slice it, and Andy, I'd love your 2 cents on this. I mean, sales fell more than expected.
Yeah.
The bottom line, the financials, the metrics are not great, but there's a lot of promises, I guess, about, cost cutting as well as, that the low-cost vehicles, it's going to come sooner.
Yeah, Tesla says we're kind of in the fallow period between 2 growth waves. However, our Bloomberg partners are arguing right now that there's very little detail in the investor deck as to when these new models will be launched. That's the problem. People really don't have that much to hold on to. And the dream is that we'd see this $25,000 car. Meanwhile, BYD, the Chinese arch rival of Tesla, has a 4-door saloon out there that's aimed straight at the Tesla 3, and it's selling for about 45,000 euro. And it's not a little runabout. It's a pretty substantial car that's bigger than the Tesla 3. So Elon Musk has his work cut out competing with the Chinese on top of his other challenges.
Yeah, Gordon, I'd love to get your 2 cents on this, whether it's an industry problem or a Tesla problem.
Yeah, I think it's an industry problem. Listen, in February, I think it was plug-in hybrids outsold. The growth rate was 7 times that of battery electric vehicles. We've said all along, and we've gotten a lot of pushback on this. EVs are going to be a niche. They're not going to take over, and the reason is simple. They cost more. They're less efficient. For your rich person who owns a Bloomberg terminal, who can afford a Bloomberg terminal, who watch the show, they have 3 or 4 cars. It's fine. But for your average person, you need a gas station. You need a cheap car. I think Consumer Reports just came out yesterday and said EVs have 77% more fixes than regular cars. These cars just aren't suited for the masses. And we've seen this historically. In the early 1900s, the auto industry tried to go EVs. It didn't work. They went back to ICE cars. So I don't think this is just a Tesla issue. I think it's more broad-based. Clearly, a lot of governments have went the socialist route, trying to push EVs on consumers, and now consumers are pushing back. So I don't think this is just a Tesla issue.
Mark, how are you thinking about at least the initial reaction? Obviously, there's the conference call, right? And that's where things can always go off the rails in the conference call, but especially so with Tesla. What's at stake here, Mark?
Yeah, I mean, I think the conference call is where they can kind of put a buttress to the relentless selling that's been going on. Obviously, you're getting a dead cat bounce, but as soon as that conference call starts, what's said is really going to matter a lot more than this initial trading. If it is disjointed, without a clear message, without a clear guidance, and all over the place, we could wake up tomorrow and Tesla could be trading 130. If it's clear, concise, if Elon delivers a real message, there is that. This has always been a little bit of a cult stock. If they can, get a little bit of that going, run right back to 165, 170. Right now, Tesla is, to me, less of an investment and more of a kind of trading type of vehicle. There are a lot more, I think, interesting places in the auto to go long term. Tesla was an excellent investment 10 years ago, but it's more of a trading vehicle to buy on weakness, real weakness, ride it up a little bit, sell it, and go that route. It really doesn't become interesting to me as an investment until we get toward 120, 115. That's an area where I get really excited, or if they can actually come out with some sort of breakthrough again and come up with a blockbuster, and they have yet to do so.
I'll give the last word to you, Gordon, on Tesla. I know you're a bear, but what would it take for you to get interested?
Look, I think the stock needs to drop a lot. Let me explain something. So right now, Tesla is trading at roughly 56 times its 2024 EPS estimate, which clearly those numbers are going to come down. So it's trading much higher than that. Its closest peers are Ford and GM, which trade around 6 times. their EPS estimate. Now, people say Tesla's more than a car company, but that's just not the case. 96% of their revenues last quarter from selling cars. I haven't done my model yet, so I don't know what it is this quarter. It's a car company. So my point is, as it gets re-rated as a car company that's no longer growing, right? They've gone X growth, which means they're no longer growing year over year. That multiple is going to come down significantly. So as that multiple regresses to what is more the mean, meaning the stock comes down as well, that's what would get me more excited.